Everyone, and welcome to the Invariant Investment Management Series, Let's Get Smart. I am your presenter today. My name is Kane Smeltz. I'm with Kane Mortgage Incorporated in Harrisburg, Pennsylvania. I'm a licensed mortgage loan originator. And our topic is downsizing made possible. Have you ever thought about downsizing? Thinking, man, I wish that I could afford a smaller home that's a one-story home that has little or no maintenance. And maybe your first thought right after that was, we can't afford it. We don't have a mortgage payment right now. We can't go back to having a mortgage payment, or it's going to be a more expensive house. It's going to give us a higher mortgage payment. We can't afford that. Guess what? There's a solution. The HECM solution. What is a HECM? A HECM is a home equity conversion mortgage. It's a mortgage that converts your equity to cash without a mortgage payment. So if you're age 62 or older and you currently own your home or are buying a home, you are eligible or possibly eligible for a HECM, a reverse mortgage. With a HECM, you're able to purchase a pre-existing home. You're able to purchase a condo. You're able to purchase a modular or manufactured home. You're able to purchase a newly constructed home. You're able to purchase a home in a 55 plus community as long as they all meet HUD guidelines. Let me give you an example. In example one, you have a house that's $200,000 in value. You don't have a balance on the mortgage. It's free and clear. You will have some costs associated with the sale of the property. Let's assume it's approximately $16,000 for the transfer tax, the real estate commission, and miscellaneous costs. That means you'll walk away with a $184,000 profit. Now, if you want to buy a $300,000 home, let's first determine what the principal limit is. The principal limit is determined from HUD. There is a multiplier that's based upon your age and where the home is located. That is taken times the purchase price of the house. So in this case, you'd have a principal limit of $159,000. You're going to have costs associated with the purchase of the home, approximately $18,000. That will allow you to put with the HECM $140,000 towards the purchase price. That means that you will need out of pocket $159,496 to buy this house. The great news is, remember, you profited $184,000 from the sale. So not only can you buy the house, not only will you not have a mortgage payment, you're still going to have $24,000 left over that you can put back into your pocket. And remember, you still have to pay your real estate taxes. You still have to pay your homeowner's insurance, but you were paying them on your existing home. This is going to allow you to downsize to buy the home that better suits your needs without a mortgage payment. Let me give you a second example. In this scenario, you're selling the same $200,000 home. You have a mortgage balance of $50,000, so it's not paid off. You don't have to have your mortgage paid off to qualify for this program. You're going to have the same costs associated with the sale, $16,000. So when you subtract all of that, you're going to walk away with $134,000 profit. Again, you're going to buy the $300,000 home. Let's assume in this scenario that you're age 75. Because your age is older, your principal limit will be higher. That's to your benefit. You're still going to have the same costs associated with the purchase, $18,000, which subtracted from the principal limit will give you $167,000 in change that can be put towards the purchase price. So in this scenario, you're going to need $132,000 and change to buy the house. The good news is, remember, you sold your house for 134, so you're still going to have excess cash left over that exceed $1,500. They say, this sounds great, but we will no longer own the home. That's a common myth about a reverse mortgage. A reverse mortgage is just like a standard or forward mortgage. The deed does not change. Whoever is the borrower is listed on the deed, which shows the ownership in the property. The government does not get added to your deed, does not replace you. You will retain control and ownership of the home. Your next question is, well, does the loan come due and payable? The loan comes due and payable in a few scenarios. Number one, when the home is sold. Number two, if the home is vacated or abandoned. Number three, if the last remaining spouse/borrower passes away. If someone were to change the ownership of the property, or if a person was not paying the real estate taxes or homeowners insurance. Those are the only times when a reverse mortgage should be called due and payable. The other question that often comes up with the HECM or reverse mortgage is, what about the equity? There's going to be equity left over my home. I want that to go to my children. And guess what? It does go to your children. Whether you have a reverse mortgage or a forward mortgage, any equity that's left over in your house gets passed on to your children. They will have plenty of time to liquidate the property and to retain the proceeds or equity from the sale. If, for some strange reason, the balance on the reverse mortgage exceeds the value of the property, your heirs, your children, the people listed in your will will not have any obligation to repay the loan. This is a non-recourse loan. The government will not come after you and any additional assets should you pass away and your balance is greater than the value. You may say, but I do want my children to be able to buy the house one day. Here's some more good news. Let me give you an example. Your children can buy the house for 95% of the value. So let's suppose that the house is worth $100,000. For some reason, your balance is $150,000, and the value again possibly dropped down to $100,000. Your heirs can purchase that property for 95% of the value. In this case, $95,000, despite the balance being $150,000. A HECM is an option. It is a possibility. You yourself need to determine if it is the right option for you. I covered a lot of information today. There's more information that you need to know. If you are interested in getting more of that information, please contact a licensed mortgage professional. You can feel free to contact me if you wish. My contact information is listed on the screen. The most important thing is that I want you to make the right decision for yourself. Value again possibly drop down to $100,000. Your heirs can purchase that property for 95%